Hey guys, it's Rohan here. How are you doing? So today in this video, I will look into this article written by Rosalind Layton about failure of SEC in regulating the crypto market, and also then I will look into some other positive news coming in the space of Ripple versus SEC case. And if we have not met before, very welcome to my channel. Here you will find me every day talking about cryptocurrency market. So don't forget to hit the subscribe button. Alright, coming to this article. So Rosalind Layton is a brilliant journalist, and in this channel I have discussed a couple of her previous articles as well, and they were also on Ripple, SEC and crypto market, and this is the latest piece from her. Let's go through it. And the focus in this article is mainly how SEC failed to regulate the crypto market in USA. Alright. Over the last two US administration, the US SEC has promoted an all-encompassing policy of regulation by enforcement for US-based digital asset markets like Coinbase and the enterprise blockchain industry that develops fintech solutions like Ethereum, Ripple, Stellar, and Circle. Two successive chairmen, Jay Clayton and Gary Gensler, said that every digital asset except Bitcoin is a security and should register at the SEC like a stock. The details end there unless you end up on the wrong side of an SEC lawsuit. The SEC banks on a quick settlement from the parties it charges. Parties which dare to challenge the SEC need financial reserves, superstar lawyers, and years of patience for litigation to play out in the court. This enforcement produces little clarity for the market or protection of investors, which is the ostensible point of the regulatory exercise. So the SEC claimed this approach would protect investors. That didn't work out for FTX. A series of regulatory mishaps and wealth-destroying events created the current crypto winter. SEC Chairman Gary Gensler claims that FTX, all other digital crypto assets are out of compliance and their innovators need to come in and register at the SEC. Presumably, paper and physical presence at the SEC are just the ticket. In any event, the SEC has not published such registration forms, guidelines, procedures, or instructions, nor any theory of how such regulatory deterrence will protect investors. Shayla Warren, the highly respected head of the Crypto Council for Innovation, observed correctly that the FTX case is not about crypto per se, but wrongdoers. Sam Bankman-Fried and his conspirators are being duly charged on multiple charges for fraud, wire fraud, theft, and money laundering by the Department of Justice, in addition to the SEC complaint and another for campaign finance violation. These shows that already crypto is subject to a variety of regulations and laws, notes Warren. In fact, there are already multiple regulators which assert jurisdiction over crypto. Gensler scapegoating the whole industry likely is a distraction from the many meetings he and his inner circle had with FTX founder SBF and how close SBF got to a regulatory pass before the fraud emerged right under SEC's nose. But FTX wasn't the only big event in crypto at year's end that launched the SEC spin machine. The cryptocurrency trial of the century, SEC versus Ripple, reached final arguments after 2 grueling years in the Southern District of New York. The lawsuit over the San Francisco-based enterprise blockchain company's sales and distributions of the XRP token is the flagship case for the SEC's regulation by enforcement policy on crypto. It was obvious when Clayton's SEC filed the case on his last day in office that it was a gamble for a quick settlement. The SEC made sweeping arguments about the XRP token itself being a security for 7 years and included Ripple chairman Chris Larsen and CEO Brad Garlinghouse as defendants. In retrospect, it seemed a tactical saber rattling to terrorize the company's 2 top officials into a settlement, isolate the company in court, and shame it into surrendering. But Ripple fought back, tore apart the SEC's legal theories, and drew vigorous support from 75,000 XRP holders and many of the industry's leading associations, legal experts, and companies. It was curious, therefore, when Charles Gasparino of Fox Business tweeted some exclusive reporting On an autopsy of the Ripple case unfolding at the SEC, Gasparino and his colleague Eleanor Terrett reported on the conflict of interest among Clayton and his now departed senior staff. Gasparino tweeted, "It's worth asking why SEC did focus on XRP Ripple, noting that his agency sources claim Ripple management was flouting their authority by continuing to sell XRP after on notice to stop because the way it was being sold seemed to establish XRP's designation as a security. Ripple never received any notice to stop selling XRP from the SEC. No letters or official warnings were published or issued that have shown up on the case docket. While Ripple's sales seem to make XRP a security to one official, a trove of internal emails and documents that the SEC fought for more than a year to hide from the judge show a muddy internal picture. What does compliance mean for Ripple or any market participants in such a cloud of confusion?" So she ends the article by saying, reporter Gasparino attempts to capture verbatim the mind-bending SEC gobbledygook on the issue, but no conversational workarounds can hide the SEC's failed destructive policy of regulation by enforcement. And on this point of why SEC particularly going after Ripple at the point, there's an interesting article here written pretty recently on 8th of January. Is the SEC going after Ripple because they have a fully working CBDC environment and central bank? And it says the SEC versus Ripple lawsuit has sparked an ongoing debate about the various reasons why the SEC might be after Ripple. One possibility might be linked to Ripple's now functional CBDC platform, which gives the Ripple ecosystem a massive hedge over many central banks. Although the SEC didn't mention that Ripple's connection to CBDC was part of the reason for filing a lawsuit against it, it will come as no surprise if Ripple's CBDC platform is a threat to other central banks. Raul Paul, former Goldman Sachs executives, make a case for Ripple's relevance in the industry, saying that Ripple has built a deep connection with global government. I think, in the quote, "I think if you lift the legal issue, the probability is that the value of the chain increases significantly, and as the world moves towards central bank digital currencies, I think the XRP network is going to be somewhere at the center of all of that. I know it's not the flavor of the day for a lot of people, but I think it's a bigger player, it's a real player and a real niche. Ripple's private XRP ledger is designed for the deployment of central bank digital currencies. The platform offers management, transacting, mining, and destroying of CBDCs." Yeah, so Ripple is been working on the CBDC technology for some time, and I also want to further mention this tweet about Ripple's involvement in CBDC. So this document, she tweets, Ripple has several pilots in the progress of CBDCs, including the Royal Monetary Authority, that is RMA of Bhutan and Republic of Palau. And this article, it's quite positive for Ripple's versus SEC case, because here's why Ripple gets an edge due to US Department of Justice statements. So it's about this particular situation that as Ripple versus SEC lawsuit continues, the Department of Justice referred to two cryptocurrencies as commodities rather than securities. This sentiment has led to optimism among Ripple's supporters, who hope that the case will give an edge to the US-based blockchain company. So the indictment has drawn support and interest from crypto community, as the Department of Justice lawyers do not identify the cryptocurrencies as security, nor do they identify securities law violations. Thus, there is a reasonable assumption that it might have a favorable benefit for Ripple. And this case that they're talking about is about Abraham Eisenberg, who was arrested a while back. And the two securities that they are talking about here are Carved Out Token, CRV, and Mango Markets. And while all these fights are going on in the legal space, XRP investment products saw record inflows in 2022. So 2022 saw many crypto assets lose value, prompting investors to pull their money from the market. During turbulent times, inflows plummeted massively. So this article talks about how various inflows have reduced for many crypto assets. For example, Bitcoin saw the third worst year for inflows with 287 million after declining by well over 60% this year. multi-asset investment products recorded inflows of just 209 million. Now, XRP remained unfazed by the twists and turns of the battle between crypto firm Ripple and the US Securities and Exchange Commission. In fact, XRP-related investment products clocked in 32 million in inflows, the second highest in the last 5 years. That pretty much wraps up this video. If you liked it, do smash the like button, and also don't forget to subscribe. See you in the next one.